Now back to today's top story, the Fed's latest policy decision and Fed Chairman Ben Bernanke's press conference afterward. The Fed left interest rates unchanged, of course, reaffirmed it would end Treasury purchases this month as scheduled and expected, but lowered its forecast for economic growth this year. Joining us now is someone who spent more than 20 years at Fed policymaking meetings. Gary Stern is the former president of the Minneapolis Fed Bank, and he joins us here on set. Pleasure to have you here, Gary. Thanks for joining us.
Thank you. Good to be here.
Let's talk about any surprises that may have come up today. And the only headlines I think that really caught my eye during the Bernanke press conference were those where he said the Fed does have other tools. If it needs to go in, it can. Some of them even untested, but it will act if it deems that necessary. Did you think that was a surprise?
I thought that was significant, but I didn't think that was a surprise because I think the Fed is always sort of on watch and always the actions it will take are conditional on how things evolve. And I think the Fed is in a situation where right now it cares a lot about what's happening in the labor market to employment and the unemployment rate and so forth. If we start to get some better readings there, then I think the Fed will be more comfortable and the status quo will prevail. If we see, at best, modest gains in employment, as we have seen in the last couple months, and persistently high unemployment rate, then I think some of those alternatives that the chairman identified might become greater possibilities.
So what other actions, then, Gary, can the Fed take at this point? This is a question that everyone asks. With rates between 0.25% or the federal funds rate there, what else do they do?
Well, I would distinguish between what they can do and the magnitude of the impact. I mean, they could embark on QE3. They could cut the rate of interest on excess reserves. They could talk more explicitly about how they're going to manage their portfolio because they have a huge balance sheet. All those things are possibilities. I think all of those policies myself are low-risk, low-reward policies. They might do some good, but they won't do a huge amount of good. They won't alter the picture dramatically. But I think they're also low risk. There's not a lot of downside to pursuing them if it turns out that they are justified.
You know, the Wall Street Journal on the op-ed page today basically said that QE2 hasn't accomplished what the Fed set out to, but then they conceded that he has defeated deflation. Isn't that enough? I mean, isn't that already a pretty important accomplishment?
You know, that's a good point, and of course the chairman emphasized that in his comments at the press conference. And yes, I would say that is an important accomplishment. I always thought that QE2 was much ado about little, because even if it worked precisely as anticipated, it was not going to be a game changer. And so, yes, it probably reduced the probability of deflation. It may have provided some modest impetus to the financial markets on the upside.
Was it worth it?
Sure, because it was a low-risk policy. I know some people got all worked up about the potential inflationary implications of QE2. That always seemed to me to be a long shot under the circumstances. And indeed, I think that's the way it's played out.
But in a sense, they want that, right? I mean, some people are saying, okay, mixed results because it continued the ever-weakening dollar, but also drove prices up. And from Ben Bernanke's perception, that's not mixed. That's great, right? It was with a sad face that he said inflation will subside over the next few quarters.
Well, I think you're right in the sense that the chairman clearly was concerned about deflation, clearly feels more comfortable with inflation in the 2% neighborhood. And so in that sense, I think he's probably more positive about the results than I am. But that's what makes a horse race, of course.
So then why not institute another QE3 at this point?
Well, you know, the chairman gave a very thoughtful answer to that question at the press conference, and I think there were really two parts to it. The first part was the circumstances today are vastly different than they were, in his view, from August 2010, and that's why not. That's one reason not to do it. The other reason not to do it, I think, is the comment I made earlier. It's low risk, but it's low reward. And I think at this point, it's really appropriate for policy to take a somewhat patient stance. I mean, the Fed's longer-term outlook, while not ebullient, is for sustained growth, sustained gains in employment, declining unemployment rate, albeit modestly. That may be, while that's not the best of all worlds for sure, and it would certainly be better if employment grew rapidly, but
for sure,
that's not bad.
Got it. Hey, Gary, thanks so much for joining us. Always a pleasure having you here.